Welcome to our sales training call, guys. We are going to be talking about today, we're going to be talking about the boogeyman of mortgage protection, the elephant in the room, the thing that nobody talks about that is terrifying to them. And the reason I'm saying that is because it was the most terrifying for me to learn. And I'll tell you guys, and that is equity protection and critical period and how to do it properly. And the craziest thing is, a couple months ago, when I decided to take a month and go back to the field and run appointments live, I had my very best friend. And every single day she would call me and she would be like, "Hey, Viv, I just wrote this, $300,000 KCL on the 6-year-old and it got declined, or I wrote this, $100,000 foresters on this 59-year-old and they got declines." And I would be like, why are you writing these policies on these older people? Like, do they even need a full mortgage payoff, or do they even need like the majority of the times the reality is you need to know how to find out if they even need that full mortgage payoff or the half mortgage payoff of the, or even if they need a term policy to begin with. Because I'm sorry, if you're 6 years old, anything that you're getting right now, you should be getting a policy that's permanent coverage, because you're getting to an age that it becomes really expensive for you to get coverage. And if you do not have something that's permanent, let's say that you get a 10-year or 20-year term, or even a 30-year term, if you don't die by then, you're not going to be able to get anything else. So the biggest challenge when you're doing mortgage protection is to understand that you're going to have different types of mortgage protection plans that you're going to be doing, right? So, for the people that are not completely aware of what mortgage protection is, mortgage protection is not a product. Mortgage protection is a way we design a life insurance policy to protect a mortgage. And what that means is that you can design in many different ways. You can design it to just pay off the entire mortgage, or you can design to pay half of the mortgage, or you can design to pay some of the mortgage, like by covering the payments for a certain amount of time. Now, the first thing I need you to understand is that you have a full mortgage payoff. That's what everybody wants, right? And you're going to have a half mortgage payoff. If that full mortgage payoff is a little bit too expensive, you can always go for a half mortgage payoff and then do the other half of an ADB policy, accidental death policy. So that way it's a lot more comfortable and more affordable to cover the entire mortgage. But what do you do if you're sitting with a 72-year-old male and a 70-year-old female that have AFib, complications of diabetes, and just had a stroke a year and a half ago? What do you do? You're gonna tell them, "I'm sorry, you can't get mortgage protection. You're not healthy enough." No, you don't do that. Do you know why? Because those people need coverage too. So it should be your obsession to learn how to properly present a equity protection or critical period policy. It was my obsession when I started out. Why was it my obsession? Because it's going to be 90% of your appointments. If you think you're going to be sitting with young 20, 30, 40-year-old, couples or people all the time, you're dreaming. The majority of the people you're going to be sitting with is going to be the 50, 60, 70-year-old people that have health conditions that do not qualify for term, that do not qualify for an IUL. And here's the thing, you need to make sure that you're utilizing, and you need to make sure that you are actually checking if these people qualify and checking if they even need a full mortgage payoff. I've done policies like this on younger people that just didn't need it, right? So you need to make sure that you're going through the entire process that I have been teaching you, to make sure that you know what it is that they need. I have many times gone into people's homes and found out that this lady that's 55 years old, super healthy, and she has a policy that she's paying $700 a month because somebody came in there and told them, "Hey, you need to have this. It's mandatory." And it's just like, I'm paying $700 a month. I don't know why I'm paying this. And I'm like, okay, Mary, do you, what are you gonna, who are you protecting here? Oh, I'm protecting my daughter. She lives in Kansas. Oh, okay. So what do you think your daughter is gonna do with the home when you pass? And then she goes, oh, she will sell the home immediately. She lives in Kansas. She has a husband. She has 5 kids, and she probably won't even come to Florida. She would just put in the market, sell, and get the equity out. I'm like, okay, so why are you paying $700 for a full mortgage payoff? Why aren't you putting that money in your pocket? She's like, I don't know. The guy just told me I had to get it. And I'm like, well, the good news is all you really need is an equity protection. So we're protecting the equity that you have, and that's probably going to cost you $80 a month. And then I go in there and I replace that $700 a month policy for a $100 $80 policy for Mary, and Mary's extremely happy that I now just lower her monthly bills by $680, and she has exactly what she needs. So I'm going to be teaching you guys exactly today how to properly set up the table to do an equity protection. I also will be teaching you guys how to ask the critical questions for critical period. And I'm going to teach you guys how to have your older clients that cannot qualify for term, that cannot qualify for IOLs, that when they come into that appointment and they go, no, 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 I only want this if it's a full mortgage payoff that's going to cover my entire mortgage for my wife. I want the best for my wife. I'm going to teach you how those clients are going to be like, no, 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 give me an equity protection, right? It is imperative. When I first started in this industry, I knew it was the hardest thing to do. So what I used to do, I used to have like a training for critical period like this one. And I had it on, I don't know, one of my apps. And every single appointment, between appointments, I would have it on my car, and I would be listening to the training over and over and over and over again between every single one of my appointments until I mastered the process. My best friend Rachel, I was telling you the story and I probably got sidetracked, but Rachel would be like, Viv, I don't know, they wanted the full mortgage payoff. I'm like, I don't care what they want. You need to give them what they qualify. And the majority of these clients, they don't tell you some of the health conditions they have in the past because they forget about it. So you need to make the case for it right in the beginning. So let's talk about how to set up the table for an equity protection. So if you go into my actual script and you go into my actual process, the first step of setting the table for equity protection is going to be on your role and purpose. When I go ahead and I do my role and purpose, and I'm going to do my role and purpose real quick so you guys remember, it's basically going to be, hey, John, I'm going to explain to you real quick what it is that I do and how I do it. And if you have any questions, please ask me, okay? So I am what they call a medical field underwriter. Basically, what that means is that for the insurance carriers, it's my job to verify you're alive, you're breathing, you are not attached to a 500-pound oxygen tank. Once I do that, awesome. The roles flip. I become the person that gets to work for you. So my goal in my job is always to find you the best coverage you're going to qualify for the least amount of money. And the reason I can do that is because I'm also a broker. I work with over 45 insurance carriers, and I'm not really partial to any one of them. I'm looking for the one that's going to be the most affordable for you and the one that's most likely going to approve you. So for me to do my job, I'm going to go through a few things. I have to go through some health questions so I understand if you even qualify and what it is that you qualify for. And then I'm going to go through some financial questions. And those financial questions, John, is for me to understand if you even need this. Did you guys just hear that? I'm telling John that I don't even know if he needs it. And I'm telling him that I'm going to go through the financial questions so he doesn't give me that kickback later down the road. I'm asking financial questions. So I'm making sure I'm doing right by you, which is true. Which is true. Because you guys have seen me that I say, hey, if he doesn't need it, you don't need it. So John, I'm going to find out if you even need this. Now, I'll be honest with you, John. I do meet people on a regular basis that don't need mortgage protection. If that's the case, I do have 12 appointments today. I'll blow you a kiss and I'm out of here. Okay. Now, if you do need mortgage protection, what I'm going to do is I'm going to pull a few options for you and we're going to look at them together. Now, you, John, you're going to be the person that's going to pick the option that makes sense for your budget. Please understand, I'm not insurance carriers. I don't make any decisions. I'm just the lady with the paperwork. Based on what you're telling me today, I will find the one that's most likely to approve you. We'll pull the options. You're going to pick the option. And all I can do for you today is help you fill out an application. We'll fill out the application today. We're going to send it out to the insurance carriers. And if they approve you, they will issue the policy, mail that policy out to you. And then once you receive that policy, you can give me a call. We'll hop on Zoom and we'll review everything together. If you want to make any changes at that point, that's when we'll make those changes. Does that make sense? So what I did right in the first 5 minutes of this presentation, I literally told him exactly what I'm going to be doing because remember, we don't kidnap our clients, right? We don't want to kidnap our clients. But I literally told him that not everybody needs this, which is true. And we're going to find out if we need this. But what I see the majority of the times that most of the people I meet need less than what they think they do. Now, what I find the most often is that most of the people I meet need less than what they think they do. Um, So if you do need this, what I'm gonna do is I'm gonna pull some options and then go from there. So that's that. That's the key. Most of the people I need less than what they think they do. You do that on your role and purpose. You letting them know that most of the people you need needs less than what they think they do. And you are already letting them know that you're here to help them, to assess and to help them with what they actually need, not what they think they want. Very important word track to have right there in the beginning of that presentation. It builds trust. It let them know that you're not here to rape them. You're here to help them, right? So, okay, that's the first thing. The second thing, as you're gathering all of the information, you're gonna gather, the beneficiary, you're gonna gather the mortgage information, you're gonna go ahead and you're going to get all of the health information. You're gonna send that health information to the wizard, and then the wizard comes back to you and lets you know that all you can really get for this couple is AHL or UHL or Liberty Bankers or any final expense policies. Now you know you have a critical period or an equity protection on your hands. Now, how do you go from, hey, I want this coverage, I want full mortgage payoff, my mortgage is $400,000, and I want to cover everything for my wife. The way you're going to do that is through questions. Critical questions for critical period. I just finished my new one call close script that is going to be added to Notion, and we're actually today we're recording the new boot camp. And on that one call close script has all the questions for you. So don't try guessing. You're literally going to get the new one call close script. So you're going to put in front of you on your screen, and when you run your appointments, you're going to be reading all those questions. So you got the answer from the wizard. You know it's going to be a critical period. Before you start explaining critical period, you're going to set the table. And the way you're going to set the table is this. You're going to go ahead right here on the scripts. There's going to have a section that says critical questions for critical period. And what you're going to do is very nonchalantly, after you go through the financial information and you kind of like already set up that they actually need this, you're going to go ahead. If it's a husband or a wife, let's say that there's a husband and a wife, and it's going to be different for husband and wife or somebody that just have kids that live outside the house. Okay, so you want to direct those questions to the other person. So let's say that you have, I'm going to role play this real quick with Arletha and Jeff. Okay, so Jeff, you're the husband, and Arletha, you are the wife. So uh, Do you have a way trick you can backtrap if they get their clients for term and then you have to go from term to final expense? I will get to that when I'm done with this training, Dave. Okay, so Alisa, you're the wife, Jeff, you're the husband. So I'll go ahead and go. Okay, so just so I can kind of understand, guys, a little bit of like what are you looking for to do with this mortgage protection? Alisa, God forbid something were to happen to Jeff. Talk to me a little bit. What would you want to do with this house? Would you want to stay in the house? Would you want to like maybe sell it, downsize it, get like a condo in the beach? Would you want to like maybe you want to stay, but you want to like maybe rent a room so you're not so lonely? What would you want to do in this house with this house?
No, I definitely wouldn't want to live here without my dear husband, Jeff. I would just be too hard. I definitely want to move and probably downsize. I don't need this much room anymore.
Okay, so you would want to downsize. How about you, Jeff? What would you want to do with the house if God forbid something were to happen with Arlita?
Same thing. I wouldn't want to live here. She does too much that I don't do, and I don't want to take on any more than um, necessary. So I'd downsize, sell it.
Okay, and that's what most people do, just so you guys know, because I understand sometimes it's too much room, sometimes the cost is too high. Okay, so you both would want to sell the house. Okay, now, um, uh, I want to live here forever, Jeff, just so I can show people how I would answer to that.
Yeah, no, I'm staying, man. I'm gonna stay here. This is my forever home.
Okay, okay, and that makes sense. I'm sure you guys have a lot of memories in there. In there now, as it stands today, Jeff, how long do you think you would be able to stay in the house? Uh, do you think that you would be comfortable with staying here? Would you be able to afford it on your own?
Well, I think so. Um, I should be able to.
You should be able to. Okay, so you mean, and again, you would be able to cover the mortgage on your own, take care of everything, the bills and everything. You should be able to cover it all.
It'd be tough, but I can do it. I mean, it'd be a little difficult, but I get used to it.
Okay. And hold on. Okay. Now going back to Arlita, she's selling the home, right? So, okay. And now if you're able to stay in the home, if you if you can't stay in the home, if things gets a little harder, right? Um, what would you do with the home? Would you sell the house? Would you rent out a room? Would you move somebody else in that would help pay for the mortgage? Would you go live with your kids?
You talking to Arletha?
No, to you, because you said that you want to stay.
No, I'm staying.
Okay, but we're gonna look at your expenses now, and we're gonna see how that looks like. But if you could not, if you're not able to do it on your own, what would you have to do?
I'd probably have to sell the house. I mean, I could maybe bring in a roommate, but I can hardly live with myself, much less somebody else. So, yeah, I'd probably sell if I had to.
Okay, and if you sold the house, where would you go?
I would just downsize, buy something smaller with the equity that we have in the home.
Okay, so you would buy a smaller place. Okay, okay. Now, Arlita, you would sell the house. How much time do you think you would need to grieve, to breathe, to make a final decision, to get things together and put that plan in place where you're selling the house, getting the best price for the home? How much time do you think that it would take you?
Yes, I don't know. I mean, well, houses are selling around here pretty quick. So I mean, and my house is fabulous. So I'm pretty sure if I put it on the market, I could sell it pretty fast. I don't know, maybe 6 months
Six
at the
months?
most.
Okay. Okay, yeah, people usually say they need, like to go through the grieving time, 6 to 12 months, sometimes 2 years if you want to be there for a little bit, but that makes sense. Now, how long do you think you need to pack everything up, put the house on the market, and sell for the best price? Are they selling like very fast? Because I know that it just took me 6 months to sell my home over here.
Yeah, I guess it would take me some time. I mean, this house is so big. We've got so much stuff, so I would need time to get it. I don't even know how I would get all this stuff up on my own. I would have some help. So
Okay.
maybe a couple of extra months.
Okay. Okay. All right. That makes sense. How about you, Jeff? How long do you think that you would need to, if you had to, if we come down to, God forbid, we have to sell the house. Um, how long do you think that you would need to get that plan together, pack everything up, put the house on the market, wait to sell for the best price? Because I know the market's a little bit slow right now. How long do you think that you would need to be able to get into a good headspace with that?
Yeah, I've not thought about it. I can't imagine being without my wife. That would be very hard. Um, I just don't know. I've seen houses in the neighborhood sell quick, and then I've seen some take a long time. I don't know, maybe a year. I've just not thought about it, Vivian.
Okay. Okay. All right. Now, let's say I'm just gonna do a different thing here, guys. Arlita, I'm talking to you. You're single. Your beneficiary is your kid. So, Arlita, you told me that your beneficiary is your daughter Anna. Where does Anna live?
Oh, Anna lives way down in South Carolina.
South Carolina. Okay. So she lives in South Carolina, and how long do you think it would take Anna to get things together, to, breathe, grieve, come over to DC, pack everything up, figure things out, put the house in the market and sell the house? How long do you think she would probably need to take care of that, to make sure that, that house can sell and take that equity out?
Geez, I think that would be really hard for her. She might need quite a bit of time. She's got little kids and she works a full-time job. And uh, she, I don't know, probably several months.
What does she do for a living?
She's a nurse.
And oh, a nurse. Okay.
Mhm.
And so she has a very busy life. Does she have time to just drop everything off and come take care of your affairs right away?
No, I would think not. She just started this job. She's barely established herself where she is.
And what do you think that she would do with this house? Do you think she would sell the house, or do you think she would move into the house?
I mean, she does love this house. I mean, she grew up here. If she could keep it, I'm sure she would probably try to, but I just don't see how she could handle her own home and this home at the same time. So ultimately she may have to sell it.
So basically, what you're telling me is that she's very busy. She's a nurse. She would have to stop everything over there, come over, take care of everything. So she would probably need some time to be able to take care of all those affairs. Is that right?
Yeah, that's right.
Okay. 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 Do you think maybe she would rent the house, or do you think that she would sell the house?
Well, I think if she could find a renter, but again, that would take time for her to do from South Carolina to be able to try to find somebody and maybe a management company. So I don't know if she'd want to go through all of that. I think
Okay.
she'd probably just want to, sell it and be on her way.
Okay. All right. So I have a pretty good idea of where we're at here. And then you guys, you're going to do the financial inventory after those questions. When you already know that you are doing an equity protection, you're going to have to present that financial inventory, making a case for equity protection. And I'm going to teach you guys exactly how to do that. Let me get a case here.
Vivian,
Let me get a, yes.
quick question. What if the child lives the beneficiary lives with the parent and they say, well, I'm going to assume he's probably going to stay here, but I'm not sure.
That's fine. How long, like, can they afford to stay there and pay for the mortgage by themselves?
Right this second, no, but in 5 to 10 years, who knows?
Exactly, who knows? So basically, right now, as of right now, if they can afford to cover the mortgage, then that's fine. And we want to make sure that they will be able to take care of their mortgage because it takes 3 months for the house to be taken. So at the end of the day, at the bare bones minimum, we need to protect the equity because if they do have to sell the house and roll the equity into a property that's paid off, then we can protect what you are actually living for them. Does that make sense?
Yeah. Yeah. Perfect.
I'll go ahead and I'll go, okay, so Lynn, remember when I told you that we're gonna look at your situation and find out if you even need mortgage protection? And then she goes, yes. Okay. So here's the thing. We have a mortgage for $200,000 here, and we have an equity of about $50,000. Is that right? Arlita, you're Lynn. Arlita, that's you, Arlita.
Yes, that's right.
Okay, now you're paying a month $1,500 a month for this mortgage. Is that right?
Yes, that's correct.
Now, whose money is the $200,000,
The banks.
and whose money is this $50,000?
Oh, that's mine for sure.
That's yours. Now, if you don't pay this $1,500 a month here, if Anna doesn't pay this $1,500 a month here, what do you think that the bank is gonna do with your money, the 50,000?
They'll probably try to take it.
Well, they won't take it. They will just sell for whatever they need, which is $200,000, and your daughter will lose this money. Does that make sense?
Yes, it sure does.
Okay. Now, here's the thing. At the bare bones minimum, I always want to make sure that I'm protecting this money, right? Because God forbid something were to happen and Anne is not able to pay this $1,500 every single month because of she has her own things going on. At the very least, she can sell the house and take this $50,000, which is what you're leaving behind for her. Does that make sense?
Yes, it does.
So at the bare bones minimum, we are protecting that money. Okay.
Awesome.
So I just told them that that's what we're doing. And then when I'm showing the options, guys, what I'm going to do is before I even go into showing the options, I'll go ahead. Okay, so Arlita, I have a very good idea before I even pull the options. I'll go, Arlita, I have a very good idea of what it is that we qualify here and what it is that we need. Now, you do remember I mentioned to you a lot of people don't need mortgage protection, and some people they need less than what they think they do, right? And you
Right.
are one of those people. Based on what we talked about here, basically you told me that your daughter is probably going to sell that house. You told me that your daughter is very busy, she lives in a different state, it's very unlikely that she's going to be moving into the house with you. And you told me that she's going to have to sell it, take the equity, and that's what you're leaving behind for her. There is no point for me to come and tell you, hey, Aretha, let's cover this entire mortgage, because that would be very expensive. And my goal is not to get you insurance broke. My goal is to protect your mortgage and make sure that I'm giving you the peace of mind that God forbid something happens to you, you leaving the house behind for your daughter so she can do whatever she needs to do with it. Does that make sense?
Yeah, it makes perfect sense.
Now, can I do a full mortgage payoff? Yes, I can do a full mortgage payoff. Do I recommend a full mortgage payoff, Arlita? I don't. Because again, I don't want to get you insurance broke. And at your age and your health, doing a full mortgage payoff would probably be more expensive than your mortgage itself. And it doesn't really make any sense for me to come and try, sell you something that you don't need. Now, there is this other plan instead that 98% of my clients around your age usually go for. And that's a plan called equity protection or critical period. What it does, Arlita, is exactly what your daughter needs. Basically, it's a much more affordable plan, a much smaller plan, a lot easier to qualify. That basically is going to give your daughter time. Time for what? Time to grieve, time to breathe, time to take, a few months to get over the fact that she just lost her mom, and I know that that's not an easy thing to go through. Time to figure out when she's going to be able to take some time off from work, travel all the way from South Carolina to DC, take her time to pack everything up and figure out what she's gonna do with that house, put the house on the market, take the time to sell the house for the best price, and then take the equity out, which is the gifts that you're leaving behind for her. Does that make sense?
Yeah, it definitely does.
So that plan, it's a much more affordable plan, easier to qualify, and basically what you need based on what we talked about. Do you agree?
I agree.
So guys, what I just did here is, first of all, I painted the picture. You need to get that brush and you gotta paint it with colors, and you need to make them see. I painted the picture of exactly what Arlita is doing for her daughter. Okay. The second thing is, I didn't tell her, hey, Arlita, you don't qualify for a full mortgage payoff. The moment you tell a client that they don't qualify or they can have something, they're gonna want that something. Trust me. You told them, hey, I can give you that, but I'm not a salesperson here. I'm not trying to screw you. I recommend this other plan instead that is basically going to do for you what you want to do for your daughter, but it's not going to cost millions of dollars and it's not going to get you insurance broke. Now, your client knows that you're not out to get them, you're out to help them, right? So I can't give you that, but I recommend this other option that's much better for you. And 98% of my clients usually go for those specific options, okay? And then I let them know exactly what that plan is going to do for you. Okay, the number one rule of marketing. Okay, I have a video on my Instagram that has almost 400,000 views that says that don't sell the product, sell the end results. What is that product going to do for your client? It's going to give her time. Time for what? Time to breathe, time to grieve, time to take the time off from work, to go to her home and pack everything up, put the house on the market, wait to sell for the best price, and allow for her to take that $50,000 out of the house. So mom knows that that money is safe and it's going to go to her daughter after all. Okay. And then you say, hey, how does that sound for you? And what's going to happen is every single client's going to oh my God, that's exactly what I need. That is exactly what I need. I don't need a full mortgage payoff, right? The other thing that I will say as well is I'll go, hey, Arlita, let me ask you a question. Do you think that, God forbid, something were to happen suddenly? Do you think that the bank would call Anna and be like, hey, Anna, I'm so sorry for your loss. Arlita was a great woman and we loved her over here. And we're heartbroken for her going so soon. And I'm sorry for your loss. To make it easier for you, Anna, we're gonna make sure that you don't have to pay for this mortgage for about a year, so you can get your affairs in order. You can figure out how you're gonna, take care of this mortgage, take some time off from work, come over here, take care of her affairs, put the house in the market, sell the house, and then take the equity out. We're gonna take care of that for you. Do you think the bank will do that, Arlita?
Absolutely not.
Yes, the bank would not do that. But you, Arlita, you can do that for her. You can make sure that she has some time to go through, that grieving process, to go through that the breathing process, to get back on her feet and take the time that she needs, where she's going to be able to take care of everything, not lose that house, and not add those expenses on top of what she has going on, and make sure that she has the time to put the house in the market, sell. If she wants to rent it and make it into an investment property, or even if she wants to move into it, she has some time to make those plans. Does that make sense?
Yes.
So that is basically how you're going to present an equity protection or a critical period. You're going to ask the questions ahead of time, before the financial inventory. And this is very important. If you say, hey, Jeff, what do you want to do with this house? God forbid something happens to Arlita. Do you want to stay in the house, or you want to, downsize, get a different place? And they say, no, 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 I want to die here. I want to be here forever. This is very important. Okay, that makes sense. But as it stands today, can you afford to stay in the house by yourself with only your income? Sometimes they're going to be like, no, I can't. I can't. And if they say, no, I can't, you go, okay. So since you can't afford, what would be option number two? If you did have some equity in the house, would you turn these houses into a reverse mortgage? Would you sell the house? Would you maybe rent one of the rooms to be able to make enough income where you can afford to stay in the house? The quality of your life, guys, is going to be determined by the quality of the questions you ask. So the whole process of making sure that you're building the value is going to come from you asking questions so the clients can say out loud what it is that they want to do and what's important for them, especially when it's a husband and wife. The husband has to hear the wife talking about what is painful for them, and the wife has to hear the husband talking about what's special and what's important to them, right? Make them say out loud, and then make them answer those questions, and then ask more questions. Dig it in. So when you explain to them that this is going to do what, it's a lot more affordable, a lot easier to qualify, and it's going to do exactly what they need. It's a no-brainer. The majority of my clients are going to be, they'll go, oh yeah. That's exactly what I need. I don't need anything else. And then I will go and I'll only show options for critical period. The craziest thing is when I hear an insurance agent, a mortgage protection underwriter go, oh, but they want a full mortgage payoff. And I'm like, and I want a Ferrari. Doesn't mean I have one. Doesn't mean I have one. I end up looking at the pink Porsche and I was like, oh, I think a pink Porsche is more like Barbie-like, and I'm in my Barbie era right now. My point is they can't qualify for the full mortgage payoff. You gotta build the value around what they can qualify. And if you are not building that value, you don't have the right control and you don't have the right posture. Act like a freaking underwriter. If you go into a mortgage underwriter or a loan officer and say, hey, I want to buy a $3 million home, and your income does not allow you to buy a $3 million home, what is the underwriter going to tell them? Can't qualify for that loan, buddy. You got to get a $300,000 loan. Be an underwriter. You need to build the value and make them see. And the way you're going to do that is by painting that picture, right? Do you have a way, a trick? You can backtrack if your clients get declined for term and then have to go from term to final expense. Okay. Very important. You gotta do a good job when it comes to getting their information on the field underwriting. You gotta like we had a training last week where Valencia talked about how to ask the proper questions, let them know that, hey, I'm only the application lady. I can't help you if you get declined. If you don't give me all the information, you have to tell me everything that's on your file. Okay. Now, if there is a situation where it's like you might be able to get charm, but it's likely that it might not be term, I always tell my clients this, hey, listen, I'm going to be giving you 3 options over here. We're going to look at the full mortgage payoff. We're going to look at the half mortgage payoff. And then we're going to look at the critical period option. The critical period option is basically going to be an option that it's going to cover your payments. Now, based on your health, okay, there is a possibility that maybe I might be able to get a full mortgage payoff. I would like to try it, but it's a 50-50. I might put this application through and it might be declined because you did have a heart attack 7 years ago. Now, if that's the case, I have no options but to go with the equity protection. Now, here's what I'm going to tell you. I think make the case for the equity protection to begin with. Guys, if they're over 50 years old, I usually already make the case for equity protection. I don't even show them full mortgage payoff or half mortgage payoff. Never. I make the case for equity protection because the likelihood that that policy is going to be declined is very likely. And I don't have no time to be going through policies like writing 7 policies in a day. So I usually will make the case for equity protection from the beginning. Now, I explain to them in a situation like this that it's like, hey, I can try, but it's very unlikely I'll be able to get this. So here's what we need to understand. Worst case scenario, we're gonna have to do an equity protection. I really want a Ferrari, but that doesn't mean I'm not gonna write my Volvo. We can try getting it. If not, we're gonna have to go with the Volvo. Okay. Now we can do it where we do it, I don't know, 2 years of mortgage payments, and then you're gonna set up the table the same way. And then you go that way. But again, I think that Dave, you can do a much better job in the front end, making sure that you're getting all the health information and making sure that you're making like setting the value for equity protection is just presenting equity protection to begin with. And the other thing that I do a lot as well, always have done, is like, hey, listen, here's the thing. I know that you want a freaking IUL. I get it. You saw on social media that you need an IUL. But here's the thing, you probably don't qualify. So here's what I would recommend. Let's do an equity protection policy. And then if you get approved for the equity protection policy, we can always go ahead and apply for the IUL. So that application does not hurt your MIB and hurt our ability to get insurance. Now, if you're approved with that, then we can cancel this one. I do the final expense first, and then I'll go for the other one that I don't know if I'll be able to get approved. So I always want to make sure that I put something in place for them, because if I don't, and then I get declined, and then get nothing. But it comes down to the field underwriting. That's why you guys have to do a good job in the front end. Why do you ask those questions before the financial questions, not after? Because sometimes they're gonna tell me, hey, oh no, I can cover the mortgage on my own. And then after I go through the financial questions, I'll go, hey, Arlitha, Jeff, you did tell me that you could take care of this mortgage on your own without Arlitha. But based on those numbers here, do you still think that?
No.
Remember, your job is not to tell them what to do. Your job is to ask them questions so they tell them what they are doing. So if I ask those questions after the financial questions, Mansoor, what happens? I don't know what they were thinking to begin with. And the financial questions is what's going to paint the pictures so they know what they're at. They're only thinking $1,800 for the mortgage. They're not thinking light. They're not thinking water, car insurance, and all the other expenses. When they look at that, the financial inventory, they're like, oh, holy moly, it's a lot more than I thought. I can't afford this. So you do it before. In my script is actually in my script it's after, so I'm going to move this is great because I'm doing this and I'm moving these things around. I'm gonna move this. Any other questions? What if they can handle it on their own? What if they really do have some extra savings or investments like $30,000-$50,000 that could handle mortgage for their kids for a while to give them time to sell? So it's just one of those things, Danny. A lot of people have $30,000 today or $50,000 today. And if they give me that one, I will say, okay, go ahead and write down the date, Danny. Jeff, give me that objection that Danny just said.
I didn't see his objection. Hold on a second.
That you have $50,000 on your bank account to leave it for Arlitha to pay for the mortgage while we wait.
I'll even add to it. Yeah, I have about 50,000 in our savings and a couple cars that she could sell. They're classic cars.
Oh, that makes sense. That makes sense. Now, Jeff, I need you to write down that paper that you just wrote down the numbers. I need you to write down the date.
Okay,
Write down the dates for me.
I did.
What?
No, Jeff, you have to say dates
What
for
date?
what? What date?
Oh, I just assumed it was today. What date?
The date you're gonna die.
Well, nobody knows that.
I know, but you're telling me that today you have $50,000 on your bank account and you have cars. What if tomorrow your roof goes out and you have to get a new roof for your house that takes that $50,000, and for some reason you have another emergency that Arlitha got sick and now you need some money for medical bills and you had to sell those cars and you no longer have that money on the bank account? Are you gonna leave her out there without any backup to cover that mortgage for a year? Because insurance is gonna be there when you die, that's for sure. Are you sure that that money is going to be there in 5 or 10 years from now?
No, not.
Are you willing to take that chance? Because if you are, I am too. It's not my wife, it's yours.
Oh, shit.
That's how you do it, Danny. Like people don't understand the reason. Like I have money on my bank account today to replace my yacht, and it was $1.5 million. It doesn't mean that I won't pay $30,000 a year in insurance, because if a hurricane comes around and it rips my yacht apart, I will take all the money that I have on my bank account and replace the yacht. I have insurance for that. So the idea is you have to make people think. And you do not have to tell them, you have to ask them questions. The biggest, the best salespeople are not the ones convincing you. They're the ones making you make sense of what you need. Questions, 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 questions. Make them convince you. And I don't mean to be a bitch when I say, hey, Jeff, are you okay with leaving your wife with that risk? Because if you are, I am too. It's not my wife, it's yours. Because again, I'm making him think. It's not my job to worry about his wife, it's his. And sometimes you need people to just knock you to see reality, especially with stuff like that. Because to be honest, the majority of the people don't want to think about stuff like that. And that's our job, to make them think about stuff like that, right? And it's so here, critical questions for critical period. Wife or husband, hey, when Jeff passes, how long do you think you would need to live in this home? And if they say, I want to live here forever, as it stands today, how long can you afford to live in this home without Jeff's income? Okay. Now, if you're not able to stay in the home, do you have a plan? Do you know which route you would want to take? Would you want to sell the house? Would you want to turn into a reverse mortgage? Would you want to rent it out? Would you want to rent it for a couple of rooms to generate some income to pay for it? You asking them, okay? You're gonna ask them, and they're going to tell you, and then you're gonna dig into this question. Now, let's say, oh no, I'd like to sell the house. I'd have to sell. I'll get a reverse mortgage. Okay, how much time do you think you need to grieve, to breathe, to make that final decision, to get everything together, to put that plan in place? Okay, I would sell. How long do you think you need to pack everything up to put the house on the market and sell for the best price? I'm not sure what I would do. Okay, how long do you think you need to grieve, to breathe, and make a decision on what you need to do to be ready to let this go? Now, let's say that it's a single mom or a single dad and they have kids. Okay, where do your kids live? Do they live on their own? Because here's the thing, guys, these people have never thought about the fact that their kids live in a different state. They have to stop their life. They need to stop their job. They need to find the time to come to a different state, pack their shit, pack their garage, put everything in boxes, call a realtor, put the house in the market. You're going to make them think about it right now. This is very important. Where do they live? Do they live on their own? Do they live out of state? Could they be here quickly to take care of things? What do they do for a living? Do they have busy lives, or do they have time to drop everything off and come and take care of your affairs right away? What do you think they would do with this house? Do you think they would sell the home, or do you think they would turn into a rental property, or do you think they would move into the home? And then here there are follow-up questions based on what they answer. This is all going to be on my one call close script, because we're going to start training everybody that's coming in new. All the new agents are going to be start training on one call close. And then down here, if it is a critical period, it's going to tell you exactly what a critical period is. And here it's going to say, hey, there's two ways we can do this. There is a payoff plan and the payment plan. The payoff plan pays off the home. The payment plan works a little bit different. And then here has all those word tracks that I told you that's very important. Basically, the best way to explain the payment plan is like this. John, do you think that if God forbid something happened to you, the bank would call Anna and say, hey, Anna, I'm so sorry for your loss. I know this is probably being very hard for you with everything you have going on at once. So to make it easier for you, we'll take care of your mortgage payments for the next 2 years. So you have some time to grieve, breathe, and get back on your feet and decide what do you want to do with this house, okay? Do you think the bank would do that, John? And John says, no, exactly. They would never do that, but you can do that for Anna. So it's all on this script. I literally, this last week, I've been working on getting this script to be a copy of my presentation, so everybody can just take the script, read it, and have Vivian's presentation from start to finish, which is Jeff's presentation, which is John's presentation, which is Austin's presentation, Coelho's presentation, Sargina's presentation. We're talking about $1 million a year producer presentation.